So hello, and thank you for tuning in with the Illinois Small Business Development Center at Chinese Mutual Aid Association. A reminder that this webinar is being recorded for training purposes. And if you have any questions throughout the presentation, please enter them in the chat box below or email them directly to the center. The Illinois SBDC at CMAA is brought to you through a cooperative agreement with the U.S. Small Business Administration and the Illinois Department of Commerce and Economic Opportunity. Through this partnership, we provide one-on-one business advising at no cost, and our services range from COVID-19 relief, pre-venture startup, and educational webinars like today. Today's webinar is on the SBA Restaurant Revitalization Fund, and the application portal opens tomorrow, and applications will be accepted starting Monday morning. To talk more about this program is a dear friend to CMA and the AAPI community, our distinguished and esteemed SBA Illinois District Director, Bo Steiner. Director Steiner, thank you so much for being here. Welcome back. And yeah, we look forward to learning more about the program today.
Great, Tommy. Thank you for having me here for sure. And as you mentioned, it's just appreciate the partnership that we have with CMAA and with you in your role as the director of the SBDC for sure. So thanks to you for pulling this together on relatively short notice and making sure that we can provide this information to as many business owners as possible. As Tommy mentioned, Bo Steiner, I'm the district director for the SBA here in the state of Illinois. And as Tommy mentioned, we're really working hard to get the word out about the Restaurant Revitalization Fund. This is a $28.6 billion program enacted to help restaurants and other businesses where people congregate for the purpose of the consumption of food and beverage. So all of these types of entities that are eligible for the program were really affected by not being able to have customers on site and in their location, and certainly to the extent not having full capacity. And this program really seeks to offset the impacts of the coronavirus on these types of businesses. So, as I mentioned, this was enacted as part of the America's Rescue Plan, $28.6 billion appropriation. And one of the really cool things is the funds can be used for expenses that were incurred anytime after February 15th of 2020, and any expenses that are incurred looking forward up to March 11th, 2023. So you have a really long timeline within which to expend these funds. And as I mentioned, you can use them for expenses that you incurred even before you receive the award, so long as they're eligible expenses for the purposes of the program. We'll talk a little bit more about that. I mentioned that there's a lot of different types of entities that are able to participate in the program: restaurants, caterers, food trucks, bars, saloons, snack bars, coffee shops, ice cream shops, bakeries, brew pubs, inns. You can see it's just a huge list of different types of organizations, because we know that all of these were severely impacted by the restrictions on on-premise activity due to the pandemic. Now, there are some entities that aren't eligible to participate that we always like to highlight: any state or local government-owned entity, any business that, as of March 13, 2020, owns or operates more than 20 locations. And I would note, for the 20 locations, this can be both in, these affiliated organizations could be, hey, I've got 15 restaurants, I've got 10, I've got a construction company, and I've got 10 franchises that do carpentry. Well, even though those carpentry firms aren't in the restaurant, aren't a restaurant type of organization, they are included in the 20 locations. So that type of example would exceed that 20 location number. You can't have a pending application or received a Shutter Venue Operators Grant, can't be publicly traded, permanently closed, or nonprofit. So those are kind of the key criteria. If you do not meet these criteria and you're in the types of businesses I mentioned before, then you are likely eligible. And the awards, and we call them awards because this isn't truly a grant program, and Congress gave us some flexibility in how we deliver it, which makes it easier for you as the applicant for sure. But you can receive up to $5 million per location with and not to exceed 10 million for the applicant and any affiliated businesses. And note too that the minimum award is $1,000. And we'll talk about the calculation and what that looks like in a moment. There's been a lot of rumors out there that you have to have a DUNS number, that you have to register in the system for award management. That is not the case. Again, Congress gave us a lot of latitude to use the existing types of identification that your business already uses in order to participate in the program. So your business entity may be represented by a social security number because I'm a sole proprietor, or maybe I have a corporation and I have an EIN, or maybe I have a valid unexpired ITIN that I use. You are also eligible. So a broad range of different types of, identification numbers that can be used in order to participate. And almost any kind of different structure you want to think of, both from a standpoint of I'm a corporation to I'm a sole proprietor, I'm a tribal business, I'm an LLC. Any of those and anything kind of on this list is eligible for participation in the program. Franchises, another big question. Hey, I'm a franchise. There's 1,000 franchises across the country. Am I still eligible? You are, so long as you meet all the other eligibility criteria and your franchises in the SBA's franchise directory, meaning it's one of our approved franchises in the directory. If you can check that directory. If your franchise is not in the franchise directory, then what we're recommending is you reach out to your franchisor and see if it's possible for them to contact the SBA and have your franchise included in the franchise directory. So just be aware of that. But I think your takeaway here is franchises are, generally speaking, eligible to participate. Bankruptcy, another common question that comes up as we look at this program. If you are in Chapter 11, 12, or 13 and on an approved plan of reorganization, you are eligible to participate in the program, which is great news. I know there's, with the pandemic came many economic impacts. So you would be eligible if you're on an approved plan. However, if you're in Chapter 11, 12, or 13 and not on an approved reorganization plan, then you would not be eligible. If you file a Chapter 7 liquidation, not eligible. And as I mentioned earlier, if you're permanently closed, you're not eligible. I do want to note that permanently closed is, hey, I'm never opening again. We know that there have been businesses that really shut down operations through the pandemic, but plan to reopen. So as long as you plan to reopen, then you would be eligible. We know that, we kind of call it like hibernation, right? Like you basically went into hibernation for a period of time. And now as things open up, you're going to get ready to open up as well. Commonly asked, how do other participation in other programs affect my participation in the RRF? Well, we already talked about the Shuttered Venue Operators Grant. You can't have a pending application or have received a grant from that program and still apply for RRF. Any funds you receive through a Paycheck Protection Program, otherwise known as PPP, those will also be subtracted out of the award in the RRF. And that's any PPP that you receive, whether it was in 2021, 2020, it was increased, doesn't matter. The aggregate amount of all PPPs received by that applicant are subtracted out of that award. When you go to apply, if you received PPP, we're going to ask you to apply using the same EIN or tax ID number that you used for your first draw PPP application. If you had one EIN that you applied for a number of entities, you'll still use that one EIN, but you'll also include the various entities that also participated in the program, but you'll apply for the RRF under that same, parent EIN. And lastly, if you, let's say, first draw, I applied for PPP using my parent EIN, Second draw, I applied using the actual entity EINs for the various subordinate entities. You're still going to apply through that first draw EIN, but you'll have a place in the application to include all of those subordinate EINs that also receive PPP. So just be aware, the application will walk you through those steps. It's going to be an online application that you may be able to use, that you may choose to use, that will walk you through that process. You'll have to make attestations, certifying that the current economic uncertainty makes the funding request necessary to support ongoing or anticipated operations. This is very much like what you've already signed and attested to when you apply for PPP, EIDL, almost any of the programs that we have pushed forward so far through CARES Act funding and otherwise have required this attestation. So nothing new on that front. Now, I receive the RRF. What kind of stuff can I use the funds on? A lot of it's similar to what you saw with PPP. So payroll costs, payroll expenses, utility payments, maintenance expenses, business supplies, food and beverage expenses, business operating expenses. The way that I would articulate this is that your normal day-to-day business expenses that you would normally incur in the operation of your business are generally going to be eligible expenses. That includes business debt. So I have loans in place for a mortgage, or I have a term loan in place that I used for working capital. You can make installment payments on those types of debt as well. Even if it's an economic injury disaster loan or a PPP, you can use the RRF to make those payments, both principal and interest. What you can't do is you can't pay off a loan. So you can't prepay principal and interest, or you can't say, oh, I've got $10,000 left on my term loan, I'm just going to pay that off. That's not an acceptable use of the funds. And there is one kind of unique attribute to the program that allows you to use these funds for construction expenses. So if you were to use the funds to expand your outdoor space or create or expand outdoor space, you can use the RRF funds on that as well. And the common question is, well, I built out an outdoor space back in last summer, right? July of 2020. Can I repay the business for those funds through RRF? And the answer is yes. You want to have maintained all of the receipts and all of the documentation supporting that build out, and that you're going to attribute RRF funds to that expenditure. You could also use RRF funds to, for example, I want to change my HVAC so that I can turn the air in my facility more frequently and potentially have it safer for my employees and guests. That's also an acceptable expense. What you can't use RRF funds for is expanding an existing location. So you can't then build out another room on your building or expand into another space, except for an outdoor type of space. You also can't open a new location with RRF funding. That would also not be an acceptable use of funds. But you can see there's a lot of stuff you can use these funds on, and it's pretty flexible. I mentioned before, you can use these funds for expenses that were or are incurred between February 15th, 2020 and March 11th of 2023. So you've got a very long period of time within which to expend the funds. If your business closes after receiving the funds, covered period ends when the business permanently closes, or on March 11th, 2023, whichever occurs sooner. And if you didn't spend all the funds on eligible uses, you will have to return any balance to the federal government. So just be aware of that as well. You're also going to have some reporting requirements. As you can imagine, it's a federal program. We want to make sure that we're taking care of the federal taxpayer dollar. And you'll be required to provide an annual use of funds assessment beginning in December of 2021, and then each year afterwards until through 2023. Now, if you spend all of the funds ahead of that time, you'll be required to provide a final use of funds assessment, and a detailed expenditure report and certification for your covered period, which is when you exhaust from when you received the funds to when you expended them in totality. Once you file that final use of funds assessment, you don't have to make any more. You don't have to make any more of the ongoing reports. So just be aware of that as well. Don't worry. I don't want you to worry about this part right now. We'll be putting out more information later that will really get into the nuts and bolts on what that reporting process is. So let's talk about calculations. How do I calculate my award amount? So we've got 3 calculations. There's actually a 4th coming out that I'll talk to at high level. I won't get into the details too much because it's really just a compilation of the 3 that I'll talk about first. So if your business was open all of 2019, your calculation basically is I take my gross receipts from 2019, subtract out my gross receipts of 2020, subtract out any PPP that I've received over the past 2 years, and then that's your award amount. So, you know, if I had, I don't know, let's say I had $200,000 in 2019, $100,000 in 2020. So that's $100,000 remaining. I had 2 PPs for $20,000 each, an additional $40,000. So I'll subtract all that out. I get to $60,000. That's my award. Formulaic, based on the revenue numbers that you provide through the application process. So you say, well, I wasn't in business all of 2019. How do I calculate my potential funding amount? In this case, what you're going to do is you're going to create an annualized 2019 number. You're going to take your average 2019 monthly gross receipts for those, which you're going to base on the months that you were in business. So the example that I would share is I was in business for 2.5 months. My gross receipts for that period were $25,000. Then we're going to look at it. Your average monthly gross receipts was $10,000. We'll multiply that times 12. That's your annualized 2019 number of $120,000. Then we're going to subtract your 2020 gross receipts. We're going to subtract any PPP loans you received. That's your funding amount. So again, pretty straightforward calculations based on the amount of time that you were open and then annualizing that number. And then calculation 3 is for those applicants that began operations on or between January 1st, 2020 and March 10th of 2021, and applicants who haven't yet opened but have incurred eligible expenses as of March 11th of 2021. So this is really the first program that has looked at businesses that maybe weren't fully open as of the onset of the pandemic. So I just want to note that here, and really looks to offset the expenses that you've incurred as the applicant business over that time. So what you're going to look at here is the total amount spent on eligible expenses between February 15th, 2020, and March 11th, 2021, minus your 2020 and 2021 gross receipts, minus your PPP loan amounts. And then that's your award amount. And think about like, hey, I was getting ready to open and on April 1st, I had a lease in place, I was paying rent, I've been paying rent, all those things. Those are the kinds of eligible expenses that you're accruing then in that period, even though you haven't opened. And that's the kind of expense that this program intended to offset. When you look at gross receipts for 2020, what are you excluding? There's a lot of stuff that you might say, hey, do I need to include this? And that includes paycheck protection loan. No, you do not need to include those. You don't need to include SBA Section 1112 payments. Those are the subsidy payments that SBA paid principal and interest on SBA loans on behalf of the borrower. You don't have to include those as gross receipts. Any economic injury disaster loan, any economic injury disaster loan advance, you do not have to include. Any CARES Act funding, you do not have to include. So I'm a business and I received a big grant through the state that was funded through CARES Act funding. I wouldn't have to consider that as gross receipts for the purposes of the program. If that wasn't enough, you also don't have to include any state and local business grants or any Randolph-Shepard Act financial relief and restoration payments. So a whole bunch of those relief funding that was out there, you can subtract out of your gross receipts amount to make sure that they're not included. So we get to this point, how do I apply? Well, the first step that I would encourage you to take is go to SBA's website at www.sba.gov/restaurants and download the application so you know what it looks like. Even better, start going out and sketching in all the information you need to have to make sure that come Monday, you've got everything in hand and ready to go. Now, tomorrow, you can apply, you can register with SBA at restaurants.sba.gov. Now, when I say register, you're basically creating your account. You can't yet apply tomorrow, but you can register for your account. What you need to have in order to register for account is you do need to have a mobile device so that we can send a code to your phone. We are using two-factor authentication to make sure that these accounts are secure. But that's one way. You can apply through SBA at restaurants.sba.gov. You may also be able to apply through your point of sale vendor. So basically, there's at least 2 point of sale vendors. I think Toast is one of them. I have to look at the notes for the other, but you can apply directly through a portal that they'll provide on their in their system. So then you can truly streamline the application process because they've got all the information, a lot of the information anyway, that's necessary to go through this application. The third way to apply is telephonically at 844-279-8898, where you'll call and somebody on the other end will take down your application over the phone. They'll send you a copy of that application that you will need to sign and notarize. And then you return the whole application, that application that you signed and notarized, as well as other supporting documentations by mail or FedEx, UPS, whatever, to SBA in order to process that application. That is probably not the ideal mechanism to use to apply, just because it's going to take time before you get in the queue to submit your application. And this is a first come, first serve program, while understanding that there are certain priority groups that will receive initial review before others. And I'll talk about that in a sec. So 3 ways to apply. Documents that you need, I'm not going to go into this slide too much. Just know that you'll have to have the application, the IRS form 4506T, which allows us to pull your tax transcript from the IRS, and then gross receipts documentation, including tax returns, bank statements, financial statements, those sorts of things, or point of sale reports for that matter. So what do I need to apply if I'm using calculation 1 and 2? And remember, that's either I was in business all of 2019 or part of 2019. Again, you need the application, the tax verification. And then for 2019 gross receipts, we're asking you to provide your 2019 tax returns. Okay. So that's required for the program, presuming that you were in business for calculation 1 and 2. We're also going to ask for the 3 most recent months of your bank statements. This does 2 things. It shows us that there have been business transactions happening for the business in the bank accounts that you're providing. It also provides us with bank account verification. So when we prepare to issue the funding, we know exactly where it's supposed to go. From the standpoint of 2020 gross receipts, a couple ways to provide that information. Number 1, federal tax returns filed. That is like the gold standard. However, we also, if you provide a point of sale report from one of your point of sale vendors, so that, kind of like with PPP, where you could use payroll provider reports to support your application for the PPP, you can also use point of sale reports from your point of sale vendor to support your gross receipts for the purposes of this program. And again, those 2 are preferred. So if you provide those options, we expect that the processing time will be approximately 2 weeks from application to remittance of funds. Now, we'll also accept financial statements that are signed, dated, and certified as to accuracy by the applicant. Now, again, this is accepted, but it may delay processing a little bit longer because we have to do additional verification on the application because we don't have that third-party certified accounting information to justify those gross receipts. I would say, so, again, federal tax returns filed is the gold standard, but point of sale reports are great as well. Calculation 3 is a little bit more complicated. The first 3 bullets are the same things that we asked for in calculation 1 and 2. However, for 2020 and 2021 gross receipts, again, we're looking for 2020 federal tax returns filed or prepared. Alternatively, you can provide 2020 and 2021 point of sale reports. Those are also preferred. And then for the expense documentation, we're going to ask for, our preferred method is that you provide profit and loss and balance sheet documentation along with a CPA comfort letter. And what a CPA comfort letter means is it's not an audited financials, it's not reviewed, but they do look at the CPA looks at your financial statements. And if they seem reasonable and appropriate, then they write this letter that goes along with your financial statements. And it basically gives us a second set of eyes on your financial statements that they seem to be reasonable and in line with what should be expected. You also want to provide additional expense documentation, invoices, payroll documents, et cetera, to support those eligible expense documents for the purposes of calculation 3. We'll also accept those financial statements that have been created internally or externally, signed, dated, and certified by the applicant. But again, if we don't have that comfort letter, it may delay processing of that application. And then the last thing I would say is there's certain types of entities that need to provide some additional documentation to support that at least 33% of their revenues came from on-premise sales. So those are brew pubs, tasting rooms, tap rooms, breweries, wineries, distilleries, bakeries. Basically, the idea is that I'm a business that people maybe come in and buy the product there, but maybe I also wholesale to bars or restaurants or to a grocery store. So we're looking to differentiate between those two different types of sales. And what you'll see is that the types of sales that can be counted as on-premise sales, it's pretty broad. So you can obviously include like, hey, I'm a microbrewery that I have a tasting room. I can definitely count all the sales where people come in and they drink a beer in my establishment. But what if they buy a 6-pack on premise and walk out with it? Yes, that can be included as well. What if they order it online, come and pick it up and walk away with it? Yes, that can be included as on-premise sales as well. It's really those examples where they're coming to your site to pick up the product as opposed to it being wholesaled to other types of entities who ultimately are the retailer in that case. And then, the documents that we're looking to evidence this may include tax and trade bureau forms, other government forms that you file, internally created reports, sales reporting from your account or reports from your accounting software. So lots of different ways you can substantiate that. If you're an inn, at least 33% of your sales need to come from food and beverage sales. So again, similar to the previous group, you need to be able to provide evidence of reports that support those on-site food and beverage sales. Now, when you get ready to apply, how do you get help? We have a call center that's open and available, I think from 8 a.m. to 8 p.m. daily, 844-279-8898. You'll note that's the same number that I mentioned you could apply online with, but they should be able to answer any either programmatic questions, application questions, as well as address your technical issues. Maybe you're having problems with the site tomorrow when you go to register. They can assist with that. We can also help in the local district office, as well as at the small business development centers. And you can find your closest resource at sba.gov/local-assistance. But I know Tommy and the team, we had a session last week to talk through this program, and they're prepared to help as well as the district office in Illinois. And then we've got help in multiple languages. So we've got a variety of different resources on our website that can help you kind of walk through different aspects of the program, and we have that available in multiple languages. The third thing I mentioned, or the last thing I mentioned on getting help applying, is if you go to our website at sba.gov/restaurants, what you'll find is that there is a program guide that's very comprehensive, talks you through all the eligibility requirements, what you need to put in the application, that sort of thing. We also have a sample application, so you can download that and fill it out. We also have a knowledge base, and what that is, it's almost like a wiki for the RRF program. You can go in there and type in your question, and I think we've got over 150 questions answered at this point on that knowledge base. So I encourage you to look there if you have other questions as well. But of course, we'll do our best to answer your question in the district office, and that call center hotline is also available to answer those questions. As far as best practices for application, probably don't need to say this, but provide complete documentation. Whatever the application is asking for, make sure that you provide everything. So if it's looking for your tax returns, you're going to want to provide your entire tax returns. If it's looking for your, financial statements, you want to provide comprehensive financial statements. Just make sure you provide everything that's asked for. If you don't, it's going to slow down your application and could jeopardize you receiving an award. Take advantage of your resources, whether it's your key advisors like a CPA or a tax attorney, et cetera, or folks like Tommy and the team at CMAA who can help with the process. If you submit your application and there are some issues, you will have to call the hotline to make changes. We can't do it in the district office. There's only one place to go, and that's that hotline. They can help you with making those changes. And one of the things I didn't mention earlier is that if you currently have an application pending for PPP, you either want to get that closed as soon as possible or withdraw your application. If you have a pending application for PPP at the same time you're applying for RRF, that could cause a slowdown of the processing of your RRF application. And just know that when you're applying for RRF, if you withdraw your application for PPP, it's kind of a net neutral because that PPP would have been subtracted out of the RRF anyway. You're like, that's way too many acronyms right there. When can you apply? As Tommy mentioned, applications open on Monday, May 3rd. So time is coming up very quickly. And during the first 21 days after we receive applications, we're only going to be processing those applications from 3 priority groups. They are women, veterans, and socially and economically disadvantaged individuals. That's the first 21 days. Day 22, all other applicants applications are going to be processed. And I think I mentioned earlier, it's first come, first serve. So even amongst those priority groups, the sooner you get your application submitted, the further you are ahead in that queue, if you will, of folks that are applying. So we're encouraging everyone to apply as soon as they can on Monday to make sure they get into the program as early as possible. I mentioned the priority groups. So in order to qualify as a priority applicant, the business has to have been at least 51% owned and controlled and managed by one or more individuals who are women, veterans, or socially and economically disadvantaged. You're going to self-certify on the application that you meet these requirements. One of the things that differs, this is normally used in the government contracting space, but one unique aspect for the purposes of this program is that an ownership group. So say you have a number of owners comprising different members of the priority groups. As long as their aggregate ownership amount exceeds 51%, then that entity is eligible. So for example, if I have a business that's owned by one person who's a socially and economically disadvantaged individual, one person's a veteran, one person's a woman, they each own 20%. Their aggregate ownership in that business is 60%. They are eligible as a priority applicant. As far as priority group definitions, I'm not going to touch on women or veterans because I think that's pretty self-evident, but we do want to talk about socially disadvantaged individuals or socially and economically disadvantaged individuals. Now, there are certain groups that are presumed to be socially disadvantaged. Those are Black Americans, Hispanic Americans, Native Americans, including Alaska Natives, Native Hawaiians, Asian Pacific Americans, or subcontinent Asian Americans. So all those groups, if you're a member of one of those groups, you're presumed to be socially disadvantaged. There may be other individuals who have been subject to racial or ethnic prejudice or cultural bias because of their identity as a member of a group without regard to their individual qualities. For individuals who believe that they meet that definition, you're going to want to be able to document why you believe you're socially disadvantaged in the event that you are audited, because you will be asked to support why you determined that you were part of a socially disadvantaged group that wasn't presumed to be. So an example though is, like, let's say that I was trying to get into a school, and because of my identity as a member of a group, I was not allowed to be go to that school, or I went for a loan, and because of my membership in that particular kind of cultural group, I wasn't able to receive a loan. Those are the sorts of things that you're going to look at to be able to document those examples to support social disadvantage. Economic disadvantage are individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities compared to others in the same business area who are not socially disadvantaged. There's a pretty good explanation of economic disadvantage on the back of the application. So I encourage you to take a look at that and also kind of verify that you meet those requirements. Just remember that for this priority group definition, it's socially and economically disadvantaged business owners. I like to throw this up. This is like if you're a soccer fan, they have the red card where the player is ejected, right? So I like to bring this up because this is a red card. If your entity if you reorganize your entity for the purposes of qualification during the priority period, so let's say I change my ownership percentages to make sure that my business qualifies for the priority period, that will result in automatic disqualification from award. So it's a big no-no, and I just like to highlight that as something you just you don't want to do. We also have some funding set aside. We've got $5 billion set aside for applicants whose 2019 gross receipts were $500,000 or less. An additional $4 billion for businesses who had receipts of anywhere from $100,001 to $1.5 million. And there's $500 million set aside for applicants with gross receipts of not more than 50,000. So we're really trying to reach the smallest of the small too. The purpose for these funding set asides is to make sure that all sizes of businesses have access to this program. And that's it. I know I went through things pretty quickly. I'm sure there's some questions, but certainly want to answer any questions that you may have or may have come to mind through the discussion.
Thank you so much, Bo, for this wonderful presentation. Really appreciate it. I think people are still, you mentioned this in your presentation. I think people are still confused out in the community. I got a first draw, second draw, PPP. Am I still eligible for this program, this Restaurant Revitalization Fund?
Yeah, 100%. So the key there is that you'll just, when you, your award, whatever award you would be eligible for, you just subtract out those PPP loans that you have received. And I think it's important to note, remember what entity you applied for PPP first draw for, because that's the entity that you're going to want to apply for the RRF through.
Now, I know you covered this extensively, but from a high level, what do restaurant owners need to do starting Friday and Monday? Like what advice do you have to get them ready?
Yeah, for sure. So I think the first thing you want to do is you want to go to www.restaurants.sba.gov. And this is tomorrow. I think it's at 8 a.m. It opens up 8 a.m. Eastern time, but you're going to want to go in and register for an account. Basically what you'll need for that is you'll need an email address and you'll need a mobile device where you can get a text. You go ahead and sign in. We'll ask you for that mobile number so that we can confirm your identity, because we're going to use two-factor authentication for the purposes of the website to keep it as secure as possible. And so that's the first step. And you can do that anytime. You can do it tomorrow first thing. You can do it over the weekend. You know, I always say, try and get in there as quickly as possible so that if there is an issue, you can get it fixed in time for application, which starts on Monday. At that point in time, you can go into the system and you'll go ahead and you can start your application. Now, I guess in that, like from now until Monday, what I would highly recommend is pulling down that application from our website, going through it, take a, print it out. I know none of us use paper and ink anymore, but in this case, just print it out, go through the whole application to make sure that you know exactly what you want to put in each field on that application when you get into it on Monday. Make sure that you've got PDF documents for each one of those documents that we're going to require, whether it's tax return documentation, whether it's the point of sale vendor reports, whether it's your financial statements. Make sure that you've got those all ready to go, labeled appropriately. So when you get into the system, you're just ready to go, okay, I'm going to upload this one here where it's supposed to go, blah, blah, blah. That's kind of how that's going to go. And if you are going to use those financial statements, do your best to work with your CPA to get a comfort letter now so that you can be on that preferred path, right, when you're applying. I think it's always good if you can stay with those kind of gold standard support documentation. It's really going to help you. And then the last thing I'd say is for those that may be applying through calculation 3, which is based on expenses, do all your diligence to make sure you collect all of those receipts, all of the other, contracts maybe that you had with contractors for, whatever it might be for servicing your business. Make sure you've got all of that in place so that, again, you're prepared to upload all that documentation as soon as you can on Monday.
And Bo, I know the SBA clarified this at the end of March, but one more time, restaurants do not need to get a DUNS number. Do they have to register on SAMS?
They do not. They do not. That was only for the Shuttered Venue Operators Grant. You do not have to get that for this program.
There was a mention of Plaid in the training webinar, and we should get our bank's credentials. If we use a small community bank, will they be connected to that service?
I'll have to find that out. I don't know what that is. I'm sorry.
And Kelly, if you want to email us, we can follow up with you as well. Any other questions in the audience? Okay, well then let's, I guess we'll wrap it up here. Bo, thank you so much for being here with this great information. Folks, we will be sending out this recording later, and I'll also include all the links that you'll need to get ready for. And please reach out to us if you have any questions. I want to thank all our community partners for joining us today. Thank you so much for being part of this webinar. And I also want to give my final thanks to Melanie and Emily. Thank you for being part of our webinar team. It's been a great year working with you in our first year of the SBDC. So thank you again, and we'll see you guys again soon.
Thanks, Tommy. Thanks, everybody.
Thank you.